Hello and welcome. My name is Thorsten Tiet. I'm the founder of Dividend Stocks Cash, and it's all about long-term profit growth here. We try to detect companies with long-term growth regarding earnings, and then you'll profit from growing dividends and growing capital gains as well. In this video, we'll look at South Korea. It's far, far away. It's so far that many people don't even know where it is located, but that doesn't matter. It's more important how to know how to buy the stock, and it's about Samsung. Samsung is one of the biggest tech companies in the world. Hardware maker. It's even a larger hardware maker than Intel Corporation, for example, and they pay a dividend of more than 3%. It's near all-time high. And these two facts alone make the stock interesting enough to take a look at it. So let's go to, as an appetizer maybe, or as an orientation. This is Samsung Electronics, it's here. And I filtered for tech companies and sorted in descending order. So the biggest or the largest tech companies are on the top. And here you see the tech companies from the United States: Microsoft, Apple, Amazon, Google here, called Alphabet, Facebook. So it's the typical successful companies. They are mostly software companies. Then we have two companies from China, Alibaba, Tencent, and the next one is already Samsung, with market capitalization of nearly 260 billion US dollar, larger than Cisco or Intel or Oracle or Netflix, and of course larger than SAP, the largest tech company from Germany, where I am located. Then take a look at the dividend yield. You see that Samsung pays by far the highest dividend yield of all these tech companies. We will have to scroll down a little bit until we find the IBM Corporation to get a stock with even higher company, but we know that the performance of IBM as a company is lackluster, much stagnation, and stagnation is not what we can expect from Samsung. If you look at the dividend yield, then we can see it the best. And looking at the dividend turbo here, this is the dividend yield, and here you see that the dividend yield oscillates between 0.5 and 1.5% in the historic past. It's 1% here in 2007, then you get 1.6%, again 1.6% in 2010 and in 2008, but for a long time even less than 0.5% dividend yield in 2012, for example, then back to 1 and 1.5%, even 1.8%, then a little drop to 1.2, and then suddenly the dividend yield becomes a boost and even reach 3.66% at the top at the end of 2018, when all stocks dropped. And now we have a dividend yield of 3.3% after a little recovery, but still rather high, as I've shown you. Also interesting, not only dividends, but also capital gains. You see the capital gains here. And regarding 10 years, you will have historic capital gains of nearly exactly 300% with Samsung. That's not as much as with these FANG stocks, for example, which are mostly software based, but Samsung is hardware based. So we better compare Samsung with Cisco systems or Intel. And here you see that Samsung beats both by large. Cisco with 180% and Intel with 220% capital gains within the last 10 years. So it looks like an interesting stock, Samsung. And if I analyze a company, I like to know what they do, and we see it here. It's just a very rough overview. We have the different segments Samsung earns money with. We have consumer electronics. Maybe you have a TV in your living room or refrigerator, then it's your consumed from the consumer electronics segment of Samsung information technology. That's where the smartphones are, and tablets, for example, and device solutions. That is where they have their memory business, and Harman sound systems, but that doesn't play a very large role here. So the most important segments are information technology and device solutions. Then comes consumer electronics, and we also see that from the three large segments, two segments have a negative tendency if we compare 2017 to 2018. Overall, we have a slight increase in sales, 1.4%, not very much. So there is a rough times for Samsung Electronics now. Have a better look now at the fundamental. Let's do a fundamental analysis for Samsung now. We enter the full chart analysis to do so, and we change the layout. And here we see the earnings profile per stock, or per share. Then we see here that we have ups and downs, but overall we have an upward tendency. So earnings and cash flows increase over the long run. We also see that the operating cash flow and earnings, that they run in parallel, which is a good sign, because if they vary too much, then we have things like Netflix, for example, or we have accruals or any other thing which needs to be explained. Here we have nice parallel cash flows and earnings. We also see dividend payments here, and we see that if we add the free cash flow, there's still enough space for further dividend increases, so we don't need to be afraid of dividend cuts. Although we see here that if we compare 2018 to 2019 estimate, that we have here some negative tendency, so earnings and operating cash flows will slightly decrease. By the way, I analyze this, or this fundamental analysis is based on Korean won or South Korean won, and not using US dollars, because otherwise the fluctuation or the changes of the exchange rates will falsify the fundamental results of the company. Okay, if we look at operating and net margins, then we see the same as we've seen here with cash flows and earnings. We see a waveform here, but we see also that the margins and we see that the margins overall increase. Now they will decrease slightly, but overall in the long term they increase. The same for the revenues. Also revenues only very slightly. In 2013 revenues were 228 million Korean won, and here they increased just slightly. What's very important too, in my point of view, that's the debt situation of the company. And we see here that we have goodwill. It's an unsafe balance position, but we see that if we add the other assets, that the goodwill is rather low. We even nearly can't see it visually here. What's also nice is that if we add the total debts, then we see that the narrow bar represents all the assets of the company, and here we see the coverage of the assets by debts, and here we see that the debts are rather low. It's all debts the company has. Here we have the debt ratio, and the debt ratio right now is about 27%. It's even decreasing. It was higher in the past. What's also interesting is the amortization power, the cash power of the company. Amortization power defined by free cash flow minus dividends. So take all cash flow which comes into the company and then subtract the dividends because they go out of the company, and what remains there is what I call the amortization power. And if we compare the amortization power with the of 1 year here, with the overall debt of the company, we see that it's about 4 times more debt than the company, than cash flows year by year into the company. And this tells us that it will take about 4 years until Samsung could, in theory, pay down all its debts. So that's a very good situation. Was it also a good investment, Samsung, for investors in the past? We see this here. We see that there were years with strong capital gains. There were also years with capital losses. Capital gains outperformed or outclassed capital losses. We see that in 2018 made a bad year for investors of Samsung when the stock lost 24%. But in the 2 years before, the stock won by about 40% each year. And in the current year, 2019, the stock already gained 70% as well. Then we come to valuation. Dividend yield we don't need. We already saw it in the dividend turbo on a monthly basis. And here we see the historic multiples and the current PE ratio. If we look at 2019 estimate, I would prefer to go to the estimate rather than to the last business year, because we are more prudent than if we base our fair value calculation consideration based on the estimate, which has lower earnings and cash flows. Here we are then on the safe side. We have price earnings of below 9, 8.7, and the same for the cash flow with 4.6. They nearly match the historic average if we consider the last 10 years, and we see that historically Samsung was or is a low-priced company. That's not rare for South Korean stocks. Samsung already had in the past 2005 to 2007 higher PE ratios, but now it's low. And if we look at the fair values, which can be calculated based on these multiples, we see that the stock is fairly valued right now with 45,300 Korean won. And in the future, that's the estimate of the current business year. And if we progress one more business year, then we think or forecast slightly improved earnings and operating cash flows. This results in growing fair values as well. Then we have we can expect slight capital gains, but not too much. Don't expect too much regarding Samsung and capital gains. I think that much of your yield will come from the dividends. And you see here that if you look at the accumulated dividends, you see here the nice upward trending curve, which represents a dynamic dividend increase. I think that Samsung may be an interesting stock for dividend investors looking for a diversified portfolio, because very often dividend investors don't have strong portfolio regarding tech companies, and maybe here you have an interesting tech company to consider for your investments. That's Thorsten from Dividend Stocks Cash. Thank you for watching. Bye bye.